Ladies and gentlemen, considering the pace at which the digital revolution is taking place, the fintech market is continuing to expand rapidly, even in the wake of the COVID-19 pandemic. The lockdowns and the social distancing norms have triggered an immense growth of digital financial services backed by e-commerce growth. This has created more space for fintech companies to innovate and generate transformative solutions for customers. To share insights on how tech inclusion can help uplift the financial landscape of our country, we are joined by the eminent speakers. Vincent, Nirav, Managing Director of International Operations, Huobi Global. Yashwant, Lodha, Co-founder, PayNearby. Nirav, Choksi, Co-founder and Chief Executive Officer of Credable. Meghna, Suryakumar, Founder and CEO, Crediwatch. Mr. Irfan, Mohammed, Chief Business Officer, Financial Services, CredAvenue Private Limited. Mr. Rajorshi, Director, Alvarez and Marshall, India. And to take the session forward, I'd like to invite Mr. Yashoraj Tyagi, Chief Technology Officer, CASHe. To know more about speakers, you can download the show catalog from the upper tab on the right-hand side of the screen called the Handout Bag. So, ladies and gentlemen, if you're ready, let's begin the session. Over to you, Mr. Tyagi.
Sure. Thanks a lot, Sneha, for the kind introduction. Hello and welcome everybody. As Sneha introduced, I am Yashoraj Tyagi. I'm really it's a real pleasure to be amidst a stellar panel today to discuss something that is close to all of our hearts, at least the ones on the panel today, and to introduce about what I do. I'm the CTO at CASHe. We are an alternative fintech lending company, been in operation for more than 5 years in the domain of extending instant credit to young millennials in tier 1 and tier 2 cities. Those like people generally who do not have access to usual banking services or would not be served by the traditional banking institutions are the ones generally served by us via our complete digital journey itself. So as you can imagine, digital payments and digital infrastructure is at the heart of what we do. And it's been more than exciting for me to see this space evolve the way it has over the last couple of years. But it's very interesting to see about how this space particularly evolved in the last 1 year during the course of the pandemic, right? And the pandemic itself has led to an immense change in behavioral patterns of consumers across the spectrum in India, and focusing particularly on digital payments. The pandemic has acted as a huge catalyst in terms of promoting digital payments and digital banking. Obviously, because of fairly obvious reasons. Very strong foundation of enabling the kind of service that we very actively use today. It's just that, the pandemic led to a spurt in usage of those platforms. That being said, right before we begin to kind of talk about the scale of what we are witnessing today, it's according to the NPCI's report, more than a third of Indian households have reported to be actively using digital payment methods. More so, they have said that the bottom 40% of Indian households as well, more than a third of them actually have reported using digital payment methods. Which is actually a huge achievement, and this accounts for almost 25 billion real-time payment transactions recorded in 2020, putting India way ahead of any other country out there, which has digital payment platforms enabled. That being said, it doesn't mean that there is a lack of opportunity. There's a huge opportunity for future growth because digital payments still account for only 15% of all payment transactions and payment-related transactions recorded in 2020, and 64% still being paper-based transactions. And this number of 15% is slated to be more than 50% in 2024, meaning that we can be seeing more than a 3.5x growth in the digital payments ecosystem in India. Obviously, digital banking has also seen a lot of growth, but there are also a lot of associated challenges around the concept of trust, around the concept of user experience, around the concept of actually being able to have a completely self-serve model of digital banking in a population that might not be very digital native. And those are the exact things that we'll be discussing in the course of this panel discussion. So without wasting much time, and on this note, I'd like to kind of move towards the panel itself. And my first set of questions, I'd say, would be to Mr. Yashwant Lodha from PayNearby. PayNearby has Mr. Yashwant been doing an amazing job in the so-called building for Bharat category in the tier 1 and tier 2 segment, the tier 2 and tier 3 segment. My apologies. But what I'd like to know from you, Mr. Yashwant, is that how do you see the growth of digital payments and digital banking in say tier 3 India today? Because when you hear about all these statistics and all these numbers about increased adoption of UPI, increased adoption of POS machines, do you actually think that this is mostly concentrated in tier 1 cities, or do you think there has been a big spurt in adoption in the so-called Bharat as well?
So thank you, Yashoraj. Right. So while the digital payment journey of India started primarily as an urban phenomenon, right, but the last 2-3 years at least specifically has seen tier 3, tier 4 and beyond growing significantly in terms of digital payments. The government is enabled by putting DBT money into bank accounts of the rural population. Right, that has helped a lot. The growth of UPI, whether it be through large private players like PhonePe, Google Pay, and so on, or large acquirers, Bharat Pay, Paytm, etc., they have also contributed a lot. And the second thing is that with banking correspondents like us, right, providing infrastructure at the ground, deep infrastructure at the villages that we have. For example, 93% of our 3.5 lakh active outlets are in tier 3 or beyond, not in the urban areas. The availability of such infrastructure has also led to growth of digital payments, right? And smartphones are growing. So all the key enablers, if you see, right, most of India has a bank account, or whoever does not, opening a bank account is easy. The digital infrastructure is now fairly pervasive or is going there. Banking correspondent agents, etc., are there, and payment platforms have evolved significantly. UPI, the kind of scale that UPI is handling, it's phenomenal. So I think while it started off as urban, but it is definitely moving towards the rural India. And I don't see, and I think the numbers that you quoted, right, 5 years from now, India will be about 50% of the households would be doing digital payments. I don't think that's going to happen without rural India, jumping on the bandwagon.
Definitely. Thanks a lot for that thought. And, just as a quick point on that, I do think that, really solid work by you and your team in terms of actually making the infra available at places where there was a lack of infra for actually, adopting digital payments. So that definitely sets the pace for what we're seeing, what we're going to see moving forward for sure. There are a couple of questions around the user experience around in the the assistance that people would still need when they're not digital natives. But I'll just come to that in a second, because that's a set of questions I've reserved for a little later. But what I'd like to do at this stage is actually see if we can quickly move to the other side of the spectrum, which is not direct B2C, because what Mr. Yashwant and what I personally deal with is actually seeing that how we can make financial services easy to use by consumers. Obviously, different segments over there, but one other interesting, one equally major contributor of the explosion in financial services is the debt lending segment, and here's where I'd like to bring in Mr. Irfan. I personally have had the pleasure of knowing CredAvenue, and as everybody else knows, CredAvenue is one of the go-to players in the debt market in India. And Mr. Irfan, my question to you would be that, obviously there has been a lot of talk around how fintech firms have been viewing consumer behavior in the pandemic. But from a purely, debt standpoint, wherein you have serviced like the whole likes of players, who want to raise debt. How have you seen the evolution of fintech in the last 1 year, or even before that, and how do you see it progressing forward? Having a very, very, very accurate bird's eye picture of this entire ecosystem.
Thanks, Yash, for that introduction, and thanks for bringing me here. So, if I can bring in our perspective of engaging with enterprises that also need to be serviced, and the infrastructure that is needed to be able to bring in debt to these institutions, institutions, enterprise, corporates, whichever way you call. Probably from a debt markets perspective, we are probably, if for want of comparison, probably I'll be comparing it to equity markets before exchanges. So that's the kind of potential we can unlock if right kind of infra is put in to enable capital markets to to these corporates, enterprises, and institutions. So that's a pursuit. That's our pursuit in terms of building infrastructure to power debt markets. If we have to think from our perspective how fintechs have grown over the last 5-7 years, and then over the last 1 year during the pandemic also, I'll take 2-3 perspectives here. One is a product, which is we generally talk about consumer finance, right? But then from if you bring in other products, there is MSME, there is two-wheeler, there is commercial vehicle, there is home loan, microfinance, gold loan. There are multiple other products which serve a particular need of various consumer finance requirements. If you see that we there are definitely challenges that are solved in a customer journey, say a consumer finance or a personal loan largely. But if you think of host of other products, largely the penetration or say intervention has been in the sourcing piece. Now let me bring in the life cycle of a particular product. You are talking about sourcing a customer, a lead generation, to subsequently using alternate data to credit underwrite. Then there is servicing, payments, collections. So then if I bring in the other perspective of say a home loan, how are we engaging say on collections? That is one big puzzle to be solved. So pandemic has thrown this as an opportunity / challenge for all of us to be able to solve this. In my meetings, we talk about even say for that matter personal loans, etc., wherein collections have been a challenge. Definitely it was really difficult for anyone to be able to move. Challenge, that's an opportunity for us to be able to go and solve for, right? And we've been talking about alternate data. CASHe has been doing, and many such other institutions are solving for this problem. Alternate data for credit and risk underwriting. But we use a set data to be able to predict behaviors, credit behavior, so on and so forth. But pandemic itself was an event, wherein we can question, how well the predictions were or not, and there could be few other events that can, challenge. So that is again I would say a problem opportunity for us to be able to fill in a gap or solve for. Then there is definitely a great evolution on the payment side, wherein say a microfinance customer which have to be engaged on a one-to-one basis, the physical collections have to be done. So payments have stepped in, and then there is definite scope for innovation there. And then there, this panel is can speak a lot about consumer finance, PL, and so on. But there are other products as well. So that is where I thought I'll bring in, our perspective of. So these questions have to be solved if enterprises have to be able to. We have to channelize debt to these enterprises at the end, right? So that's a big opportunity. So at the end, if we have to say that the pandemic has thrown out these challenges to us, there are opportunities or innovations that have come in. At the end, the end beneficiary is the customer. So Yash was talking about a tier 3, tier 4 customer. Now that particular consumer has many options. That is a great piece. Probably those customers were not served at first place also. So exclusion, technology has brought in these people into the financial services gamut. I mean institutional finance gamut. And then there is an efficiency in various processes, life cycle of a particular product life cycle kind of thing. So at the end, one other perspective from an enterprise side is, so we have PayNearby, we have few other institutions who are doing CASHe, Credible, many others who are doing good work. At the end, there is a bank, which has a risk appetite, which is good in terms of bringing in housing a particular risk. So I think pandemic was probably the period which through open the challenge or opportunity to be able to leverage these strengths, right? Someone who can originate well, someone who can bring in their technology strengths well, and then someone who can house that risk well, right? So I think this is a great opportunity for us to be able to bridge these two strengths of two enterprises, a small or big, someone who is great on nimble and fast on technology, someone who is holding in a traditional model. So I think this is how I would say, from a product life cycle challenges as well as opportunities perspective, we've seen this pandemic going around.
So thanks, Mr. Irfan. That was very, very interesting, to be honest. And I like how you mentioned that the pandemic has actually been a black swan event and has driven black swan behavior among people. So on that note, I'll take a little bit of a diversion and move to something that is slightly alternate, if I'd say, to what we've been discussing so far. And I'll move to Mr. Vincent. So Mr. Vincent, with you actually, with Huobi Global being one of the largest players in the crypto segment, how have you seen this space evolving in the last 1 year? In terms of the behavior that has been, driven in terms of lifestyle changes, and have you seen an increased adoption of crypto-related products, particularly for things that they might not be actively used, like investments? And how do you see the regulatory environment in this also panning out as we go ahead?
Yeah, thank you for your question, and thank you for having me today. I do think that the pandemic accelerate the development of the technologies, and quite a lot of workers shift from offline to online. And pandemic also drive the crypto adoption and the education during the period, because people are spending more time on online and learn more about crypto. And we find that some of the e-commerce all over the world are starting to accepting crypto as a medium of exchange, and that is like more than 50% during the pandemic period, and its share of the total retail market also grew by 40%. And this is a very amazing digit for us, and then we understanding that if there is more about the crypto adoption in the world, then there will be more people using and accepting crypto. Yeah. And I do think that there's few things that are also changing the whole landscape. Like 4 things. The first one is about DeFi, decentralized finance. The second one is about NFT. The third one is about game finance, and the fourth one is about payment. I think payment, you guys have already mentioned some part of it. And DeFi is one of the decentralized finance is DeFi. Its short form is DeFi. That is making use of the smart contract to minimize all the middlemen and infrastructure requirement, and to operate in traditional finance infrastructure in order to save more costs and make the whole business flow more efficient. There is quite a lot of application by using smart contract nowadays, even though some big enterprise like IBM are using smart contract in the business flow. And the other part is about the investment. Quite in the Indian market, and also so as the rest of the world, they also accepted crypto as an investment. As crypto, you can use like less than $100 to participate in interest earning deposit. When compared to the traditional banking industry, you may need quite a big lump sum in order to participate in the earning deposit campaigns. But in crypto world, you can only needed to use a small amount in order to participate. And the second part I want to mention is about the NFT trend. NFT is a non-fungible token, and it can also facilitate the global platform, like other young artists or old artists, experienced artists, all over the world. They can put their artwork or their creation to the marketplace in order to sell to the market. And for example, like the artwork usually in London, they can only, in the old days, they can only contact the people in London, but now you can sell all over the world, like selling to Australia, selling to India as well. So that is without any physical presence there. So that is a very good enhancement in the trend right now. And the second thing, the artists also can monetize their work by selling on the blockchain network, and it can continuously creating income for them as long as their artwork, their artwork can sell to the third parties again and again. They can also receive the patent. They can create a long, lasting income for them. And also protection and for all the IPs and music and artwork, as NFT can provide them like beneficial to the users that is not afraid of losing all the control of the IP and the creator. They do not need to care about the pirate issue, as all the NFT is already marketed in the blockchain environment. Okay. The third thing, more about the game finance. Some kids want to play the games nowadays in the pandemic period. They usually stay at home and spend all the bandwidth on video games. And game finance enable these young kids to pay on the online. They just pay to earn, and then make some money from the reward of the game. And they can earn some crypto and sell the crypto to earn a living. Yeah, that is something. These are the trends I want to share with you guys.
Thanks, Mr. Vincent. That was really very interesting. And that's a perspective that not a lot of people are very privy to. So it really helped quite a bit. Thanks for joining in the session as well and sharing these thoughts with us. So we'll kind of continue and talk more on the more traditional aspects of finance now. We were discussing right before this. We were discussing with Mr. Irfan on the debt side, and I'll probably continue the discussion on that front itself right now. So and this is where I'd like to bring in Mr. Nirav Choksi, because and ask him questions more on a enterprise servicing point of view for SMEs in particular, because we have discussed about consumer finance, we have discussed about what CASHe does, about what Mr. Yashwant mentioned about PayNearby. Just from an SME servicing perspective, like how do you see the digital experience over there? Like do you see that is it like with the pandemic, have you seen like push towards a completely digital experience for servicing SMEs as well, or does it continue to be mostly digital or physical in nature as well right now?
Hi, Yash. Thanks. Thank you for that. So if you look at SME financing today, and if you look at platforms such as Credable and a few others who are in that space, there is that entire process is completely digital, right? There is no physical interaction or documentation or paperwork exchange between the SME and a platform like us. And then at the back of a platform like us, there are several banks and other financial institutions participating. And we don't, a large part of that has moved towards digitization in the last 1 year. I remember a year ago, banks were very skeptical signing agreements digitally or doing Aadhaar e-sign or even doing KYC and without doing OSV, right? So with video KYC coming in, with all of these new tools coming in and frameworks which RBI has put together, you're seeing a huge shift even in traditional organizations to move towards a fully digital onboarding and fully digital experience for small businesses. Of course, there are still traditional financial institutions for who credit underwriting and onboarding is largely physical, but I think that's a matter of time before we see that shift to a complete digital platform.
So that's thanks for that perspective, Mr. Nirav. And before I move to the to the next segment, I'd like to extend the question to you itself. That when you mention about servicing SMEs, and Credable is also involved in kind of evaluating the credit risk of SMEs as well, to extend credit to them. So obviously, because of a lack of a digital footprint around a lot of SMEs, how has Credable and how have you been able to deal with the uncertainty involved, particularly with SMEs in something like a pandemic, and with the lack of a lot of digital footprint? How has the credit segment of SMEs evolved over the last 1 year? What would be your views on that?
So Credable is primarily a working capital platform, right? So we focus on partnering with SMEs to enable both payable and receivable side financing.
Correct.
And a large part of that is predicated on who they're serving. So who are their customers? So if those customers are credit worthy, then operational history of the SME becomes more important than financial credit underwriting. So we've been able to do a lot of inclusion to first-time borrowers or to not the best of credit, as long as you're focused on the receivables side of the business. And we've seen a huge uptick on that in the last 1 year, and Irfan will agree, he must have seen a lot of that happen in the MSME segment as well. So I think as long as we are focused on working capital within the receivables and payables segment, traditional credit underwriting has been reimagined. If you talk about project financing, you look at equipment financing, and you look at the other aspects, then that still remains a very human touch oriented approach. And I don't know how that will transform, to be honest, or whether it should transform, to be honest.
Sure. No, thanks. That's a very interesting perspective. And now that we move to evaluating credit risk, I'd like to move to Ms. Meghna, because so Ms. Meghna, see what Crediwatch has been very well able to do is to actually very, very actively be in the segment of being able to evaluate enterprise risk. And I'd love to hear your thoughts on that. But more so because of you also actually having access to a whole gamut of information in the segment and ecosystem as a whole. What would be your perspectives, on the growth of digital banking in India in general, and how do you see this evolving? And also the fact that my second question would be, and I'm putting both at the same time, that have seen that we are gradually shifting to a highly data-rich world, obviously a lot on the consumer side, but also in the SME side as well. So how has Crediwatch been able to leverage, the same to actually, kind of have more nuanced credit evaluation techniques out there?
Sure. So I start with the digital banking, explosion, right? And then I lead into automatically as to how data has become extremely important to offer better rates to small businesses, right? If we just look at, all of these statistics, we see that digital banking, I think, is growing at a rate of about 22% CAGR between 2019 to 2024. And obviously, there's been an explosion, and mostly through PC and mobile. While in the initial, early years, the explosion was actually that everybody got a bank account and we had digital payments, right? That was the first level of explosion where banking started. What we've seen in the past few years is that there have been a lot of alternative forms of financing that's become digitally available to small businesses. So while retail has taken off really fast, what we're seeing is, especially in the last 2 years, especially a trend during the pandemic, is that SME lending and digital lending has really taken off. This is because there's been a slew of, regulatory enablements, as we could say. For example, the video KYC, which was usually used for opening a current account or for the retail sector. Now the RBI has said that you can use that even for SME lending, right? That's kind of been a key enabler in kind of digitizing the journey, a part that was almost manually. Second was even the fact that documents, right, original, seen and verified, now can be verified digitally instead of sending a last mile person to do that. So the RBI allowing, the only part that was not digitized to be allowing us to get it digitized, I think is going to cause an explosion. I can see a lot of smiling faces with Nirav and Irfan as to what's going to happen in the next 12 to 18 months in terms of enabling SME lending. So the government has been really good to us from that perspective. The other thing that has happened is the pandemic has sort of forced small businesses to look at digitizing and adopting to digitalization from internally from their own perspective. So there's been a huge growth of adoption of CRM, ERP, digital accounting, and all other kinds of technologies that small businesses themselves are adopting to do business better, right? And this has actually enabled alternative form of data to become available. And even GST, a measure that was taken where you have to file the GST returns compulsorily, has made an alternative surrogate financial data available to lenders to be able to lend. And I'm sure, especially in supply chain financing and invoice-based financing, all of these data sets become extremely valuable. So because these alternative forms of data have become available, I think that we can now figure out how to price businesses better and offer them better, credit rates, because we can price them much better for risk, right? So that's kind of one of the positive things that has happened, because before this, SMEs, would get a higher rate of credit because banks would just look at 3 years of projections, and that would not be a really thick file for a small business. But now with invoice-based financing, GST-based financing, bank statement analysis, and all of these alternative forms of data that's becoming available, and a lot of alternative risk scoring companies like Crediwatch, like this is what we do. We have a trust score for, enabling lenders to lend, and we have an early warning score for you to monitor your portfolio. So because of all of these advanced analytics that's becoming available to lenders to help manage these risks, I think that we can really see SME lending take off because of the availability of alternative data.
Thanks, Meghna. That was very, very well put. It's very interesting, to be honest, to see the evolution of alternative data available specifically for an SME segment, because as previously Irfan and I discussed around the concept of actually having alternative data for consumer financing. It's very interesting to see that how SME risk can be priced better now with the availability of data that was largely not available probably like even 5 to 6 years ago. So very interesting thoughts over there. What I'll now do is that I'll move to Mr. Rajoshi quickly, but when we move to Mr. Rajoshi, I'd like to cover a slightly different aspect of this entire ball game. And we just spoke about how there has been a transition to a more data-rich world as well, because of largely more like alternative available, more digital footprints being available for from consumers. So what this leads to is a responsibility on fintech institutions like ours. Is that we should be able to offer very nuanced and very personalized user experiences to customers, which they traditionally would also not have access to. And it becomes very pertinent also that with the likes of highly specific information that somebody has, why should they not go the extra mile and try to offer user experiences the kind the customers should deserve, and of the kind that the particular segment that somebody is catering to should get. So Mr. Rajoshi, from your perspective, how do you see the importance of personalized customer experience at scale, and more particularly, what are the different aspects that you see being personalized and are being offered like with a very I would say a high grade user experience because of like this the increase of data being available on consumers.
Sure, Yashoraj. Thanks. That's a very interesting and critical question. And just a couple of data points, right? What Meghna and Nirav were talking about some time back. There are so many customers who are entering who are typically the NTC borrowers who are entering the formal borrowing segment. It is actually projected by some estimates that there will be at least 20 to 25 lakh new customers who will be entering the formal credit system in the next 2 years. You've heard about GST return filers. I think that's also going to go up by 2x to 3x time in the next 2 years. Take, for example, someone like Paytm, right? I mean, they've got 45 crore customers, a lot of merchants over there. Just imagine the kind of transactional data they have, which is really customized to the particular merchant. And a lot of products can actually, they can actually be customized and prepared for this kind of a customer segment where Just imagine your local kirana store, your local chai wala or a cigarette wala. They've got this boxes installed over there, and the kind of transactions is getting monitored on a real-time basis. Second point is, we've seen this entire Jan Dhan scheme by government. There are more than 42 crore Jan Dhan accounts, which is at the end of March 2021, which is like a huge thing. And people in the informal segment, they've actually been covered in this entire banking and financial inclusion by the government. Now, the other part is access to data. And you very rightly pointed out who's got access to all of this data. There is access in parts which is being provided by some of these players in the market. But the last mile MSMEs and the last mile self-employed people who are like small-time professionals who run their own business, they need products to sustain their working capital and business growth needs. So how do we reach out to them? Where is the access to data? With account aggregators coming into the overall scheme of things, I think there'll be a lot of traction once we see the financial information providers, which the list keeping, it getting long in terms of, a lot of banks, NBFCs, insurance and mutual funds being financial information providers. We'll see a lot of traction in terms of a lot of organizations like yours itself, who would probably rely on that kind of a data point to customize product solutions to the last mile people who are actually at the bottom of the pyramid, who need lending solutions rather than, traditionally what the banks have been catering to, which is truly the cream de la cream segment. So I think that's very important. Also, we've seen a lot of traction from the entrance lenders in terms of, getting data not only from what they already have from the customer franchise, but also from, accessing data from, let's say, a B2B partnership platforms, where they can actually get hold of more than 150 variables, which can actually help them formulate an underwriting decision, which is apart from, of course, your GST and financials. It can be transactional data, nature of business, demographics, seasonality, anything. So I think that's very important, how you leverage all of these data, which is available to you. Access should be democratized across most of the players, so that the bottom of the pyramid gets access to real-time lending.
Sure. Thanks, Rajoshi. That was very interesting, and in fact, kind of like really aligns with with the increasing talk around how fintechs should actually personalize user experiences with a segment of one, that you are able to create an experience that every single customer on the platform views your products in a different fashion, kind of borrowing from what Jeff Bezos says, that every single customer should see a different version of Amazon, which is extremely personalized to themselves, and that you do really see that happening in India with as you mentioned, increasing access to data and democratizing with the increasing democratic access to data with account aggregators coming in as well. So very interesting over there. What I'll do is I'll just quickly come back to you, but first I'll go to Mr. Yashwant again, because we are talking about user experience. A very interesting perspective comes around that what do you do again in terms of user experience for people who probably have negligible digital trails online and also are not digitally savvy in the first place, which is again bringing in the concept of building for Bharat, right? And there was this very interesting talk I was a part of it, and we were discussing that if somebody has never seen the image of a shopping cart in their lives, you can't put a shopping cart in an app and decide people click on that to shop, right? Because that's the problem. And so from your perspective, with the increased adoption of digital services in tier 2 and tier 3 India, do you generally see self-serve models being dominant, or do you see that it will also be a very assisted journey for the time being, so that people do take their own time to become digitally savvy with those platforms?
Thank you, Yashoraj. So a lot of the things that was mentioned by everyone, right? For example, creating a segment of one where personalized experience delivery is there, availability of data is there. A lot of data is getting generated, and I think at least tier 3 and beyond still have some way of having enough digital trail, right? Payments is the first leg that is on its way of digitization, I would still say. right? While the infrastructure is now getting laid in terms of UPI and BC networks like us and acquiring points, people are now starting adopting it, and it'll take that journey. With payments getting enabled, the one thing that is a very key portion of the problem solved, right? But financial inclusion, at least specifically, I would not say, I'll not go to other sector, but financial services, right? And it's not just payments. It is also about insurances, investments, lending, which a lot of our panelists talked about. These are all services that require trust. One is the understanding of whether the icon means, this shopping cart icon means shopping or what. But the other thing also is, even if I understand that this button means insurance, do I trust that app? Do I trust myself to be able to make those decisions very well, right? Even now, for example, Yashwant, probably when you buy your next car, most probably you're going to ask around, right? What are you using? What car do you have? Maybe do some online research as well. And we are the most evolved, the most sophisticated customer set who's already on the self-service journey, right? Even we don't make our decisions ourselves. So while we do the payment journey ourselves, we may do the application journey ourselves, so to say, right? But we still look at a lot of advice from a lot of people. So assistance to that extent will continue for foreseeable future. Obviously, I'm not saying nothing lasts forever in the world where technology is, changing things far faster. But I don't see that going away. And user experience, and you were asking about user experience in building for Bharat, right? The key is keeping it short and simple, right? Video mein samjhaye, use videos, use vernacular. Sorry, I slipped into it, right? Those are the things that work really. And the trust, that the biggest fear that Bharat has is, what if I get conned? Sure. They're used to it, frankly, at the risk of sounding whatever it is, right? So they need that trust of, if I get conned, what happens? Is this organization not going to con me? Is this app going to be an app that I will not find on the Play Store tomorrow? What happens then? Because now I don't even know where the office is, right? Those are the user experiences that we need to solve for. A paperless experience becomes critical because, trust me, not even India Post goes to all villages in the country. So paper वापस तो आएगा नहीं वहां से, right? So those are the challenges that we need to really solve for when it comes to user experience, delivering trust, removing paper, explaining it simply. Those are the things that need to be solved for, right? And I think the system's going to be there for some time. Over to you, Yashwant.
Sure. No, thanks, Mr. Yashwant. That was very, very well said again. And falls bang into the age-old saying that banking and financial services are a high trust game, and that needs to be solved for first before anything. So I would want to go to Mr. Irfan for a next level question, but right before that, right, for a very quick question to Mr. Rajoshi, that since we were talking about user experience, and I'm sure that you would have also seen a whole gamut of services serving tier 2, tier 3. Like, would you like to add anything to what Mr. Yashwant said in terms of offering user experiences that are differentiated, but for the Bharat population, so for that matter?
Sure. To the point which Yashwant made, I think what the informal segment they are demanding right now is, you need to be transparent to them in terms of your terms and conditions, right? Probably they don't understand what annualization of interest rates is. So are you transparent enough in terms of communicating your terms and conditions? They don't understand cryptic English messages you send to them in terms of, either the onboarding process or sourcing process or even the servicing process. So maybe vernacular as a theme needs to be driven as a DNA of any organization which has got financial inclusion and catering to this bottom of the pyramid kind of customer segment. Again, collection agents, contact centers, they need to understand the financial position of the customer of this particular segment. They are very sensitive. You just can't be bombarding them with messages or having very tough calls with them. You need to understand over a period of time what's the financial position, what's the seasonality of their incomes over a period of time. So finally, I think it has to be a shift from a sales orientation to an engagement orientation for any organization which wants to cater to this kind of a customer segment. Teach them what is good financial behavior, what are the pros and cons of repaying back on time. All of these things are so basic, and that's how you cater to the sensitive kind of a customer segment.
Thanks, Mr. Roshi, for that. Very, very helpful. So now I'll go to Mr. Irfan, and I do have a very interesting perspective around what I'd like to. I'd like to get an interesting perspective from Mr. Irfan actually around technology platforms, because we've spoken about digital payments, we've spoken about user experiences around them, around digital banking. But all of this is fundamentally powered by a strong technology platform. And when it comes to B2C firms, they can wax eloquent about the differential technology they're offering to consumers and how they're using machine learning and AI to actually personalize services for that. But what is probably not spoken enough is about how important it is also to have an as nuanced a technology platform at the debt serving level, because at the end of the day, with the like an explosion in the customer bases of fintech, as well as the number of fintechs that you see spawning up, it becomes important for like large players like CredAvenue to be able to seamlessly service them as well. So seeing that how elegant a platform CredAvenue has made, Mr. Irfan, I'd like to know from you that what goes into making a very solid financial services B2B tech stack out there.
Thanks for asking that question, Yashoraj. So I was just listening to the comments or feedback coming in from the co-panelists here. At the end of the day, the user is user, be it an institutional user or enterprise or a individual. We use different terms, but at the end it is the same trust in say institutional context. We talk about it as data security, right? Data confidentiality, data privacy. So I'm just was thinking, it's all same. It's just the way I am seeing this is in enterprise scheme of things. This is a collective wisdom of group of people who are called a committee or a team or various functions that take decisions. But the only difference that I see is that there is an institution which is run with collective wisdom. So if you're talking about a bank, there are committees at various levels, group of people, heads, etc., so on and so forth. If you're talking about an enterprise, again it's an entrepreneur and then some other manager, etc. So there is a collective wisdom coming in. So the way I see this, the requirements of an enterprise or a corporate or a bank are layered, probably structured, because there are more people involved. The process of decision making is also, very well defined, process oriented. We can say it is complex. Here it is an individual who has to, whose in trust we have to win or gain. Here it is about convincing a committee, right? So that's the reason why I say complex or process driven. And like any other technology or anything, I think we all will go through a phase of transition. When a consumer was introduced with this particular app, there is a phase of creating awareness. We call it education, awareness, whatever we say. There's a phase of awareness. Then we'll have to convince, building that conviction with the counterparty, and then subsequently winning over. So that is one transition. We are talking about co-lending, co-origination after the regulations came in as a new product. We've gone about creating that market, creating that category, spreading around that awareness to building that conviction to winning the market. So that's how, is a transition each product will go through. When it comes to institutional credit, diligence and everything, same piece. To put it differently, you start with bringing in efficiency with the existing processes. We make them efficient. Then you further make them commoditized, right? Wherein, it's not about just winning here and there. You win because of the experience, because of the trust, so on and so forth. So I think institutional lender or enterprise also, goes through the same transition, but we need to understand the requirements of that institution or the, market we are playing with. So I wanted to actually, think about it from a data security, confidentiality, conflicts, and decision-making perspective. But Yash talked about it, Raja talked about it, in terms of winning the trust, so on and so forth. It's no different. And last thing that I would like to talk when it is about enterprise or B2B kind of lending, especially in the markets that CredAvenue plays, it is regulations. Regulations will drive. By the way, that is true for even consumer. More so, in enterprises, that a particular regulation or the direction a regulator is taking can lay the path to that particular product or winning a particular market, easy or difficult, or how long or far it is going to be, how long or near it is going to be from winning that. So that's been our method of working. We've been trying to understand the requirements, specializing in enterprise and corporate finance, and building around that. Go small, go deeper, and then solve each and every problem one at a time, and then go for it. So then there are few from a regulations perspective, path breaking regulations. Say from the perspective, Meghna was talking about video KYC, how OSV to video KYC is solving for that. GSTN, that will solve for alternate data for enterprises and corporates. And think about account aggregation. That is a big game changer again, right? That brings in a lot of data for everyone to be able to evaluate and then take a decision. So from a collateral based lending to suddenly here a flow based lending. So most of us are trying to solve for that, making it more efficient and sharp for our end consumers. So I think that's what it's all same. Only thing is you have to understand that enterprise, who is your consumer or say customer, very well, but the needs are different, the processes are different. So yeah. Thank you.
Thanks a lot, Mr. Irfan. That was very, very, very elaborate and very informative. Just a quick check, Sneha, could you let us know how we are doing on time?
All right, that's exactly why I'm back here. Just informed that we've exceeded our time limit for the session, so we will have to conclude in the next 5 minutes. Maybe we can have the closing remarks from all our candidates.
Sure. So I would have ideally wanted to discuss around regulation, but that's for some other time then. But so what I do is that I'd like to close on a quick opinion poll from all of you. So when it comes to digital payments as such, and you see that whether if you're doing anything closely related to financial services, digital payments has in a way impacted the business domain that all of us would have been in. So when it comes to the increased adoption of digital payments and digital banking, increase innovation in that, which will also then again fuel further adoption of digital banking and digital payments. There are probably say 3 domains that I can think of right now that you can that kind of result as a corollary to that. The first one is sometimes for some firms it might be, particularly for B2C firms, it might be easier customer acquisition, particularly in tier 1 cities where you can now have purely online journeys without actually having an assistance-led model. It is also a better user experience that you can offer, not having paper-driven processes, which Mr. Yashwant said about. And thirdly, also is what people see because of reduced operational expenses. Because of a largely digital platform, they do see it as a potential of higher, longer-term revenue. So longer-term profitability, I would say. So basically, the 3 points would be that it might lead to a lower cost of acquisition, B, better user experiences, and the third one being increased profitability. So if you as a firm have to prioritize that, you because of the better technology at play right now, which among these 3 would you prioritize, and as something that you can take advantage of because of increased adoption of digital payments, what would that be? With A being easier lower cost of acquisition, lowering your cost of acquisition, B being bettering your user experience, and C being kind of trying to focus on increased profitability in the short term. So I'd like to first go with Mr. Yashwant on that front.
So Yashwant, that's a tough choice, isn't it?
Sure,
but See, it's a difficult question, but I would see one is, like you already mentioned at the start of the conversation, right? Still a large part of India is not in the fold of financial services.
Sure.
If you ask me, I would want to go for getting more and more customers into the fold, right?
Sure.
We need first people in, and then the entire community, the entire fraternity can work towards delivering better experiences, and some will do better than the others. But it should today be the job of, and I speak maybe a little bit more, but I think it should be the job of everyone today to first get more and more, whether it be individuals, whether it be consumers, whether it be merchants, or whether it be first-time insurance buyers, first-time borrowers, first-time bankers, whatever, to first get them on board. And then we see how to deliver better experiences. Or if I really have to choose.
Sure. So I would say you're going for A and then B and then C, if you have to choose it. All right. Sure. Thanks for that. And Mr. Rajoshi, what would be your sequence?
For me, it's all about customer experience. You create that experience for the customer. I think the word of mouth spreads, and that leads to your reduced cost of acquisition and take care of your OPEX. So that's my priority.
Got it. That's very interesting. Now, Mr. Irfan, what would you say on that front?
So thinking from our business perspective, which is institutional, I'd again go for user experience. No doubt about exactly the reasons that Rajoshi talked about. You have that experience delivered once, and then automatically it will solve for acquisition and then profitability. So it's experience which is going to be top priority.
Got it. And Miss Meghna, about you?
So, I'm going to say the same thing, because if you have great customer experience, then A and C will follow. And that's kind of how Crediwatch has grown, with word of mouth, because we've been delivering our products and services with customer experience. And that's what's led to acquisition and overall growth in terms of, our financial revenue. So I would go with customer experience.
Thanks. And so that's a great answer. Looking at that, it's been a similar answer for the last three. It almost seems like a leaked exam paper now, with the questions being the same. I just happen to give a hard time to Mr. Yashwant, having him to choose first. But ending with Mr. Nirav, what would you have to say?
Yeah, I would go with the majority. I think the experience, at least for us as a business to business company, experience lowers cost of acquisition and hence increases profitability. So I think that's really where it is.
Absolutely fair. I mean, if it were to me, I would have also gone with that itself, because and I think in B2C, leading a major differentiator now, seeing that almost everybody can, if they want to, they can offer the same service, actually becomes how much of a better user experience you can offer with what kind of data you have, and leverage that to lower your cost of acquisition, as Mr. Rajoshi pointed out, and that will naturally lead to high profitability for you as well, because you have lowered your CAC in a way. So that thanks a lot. That was a very, very, very interesting session, and a very good opinion poll also, and good to hear your thoughts from all of you. Personally speaking, it was very enriching for me to know about things that I might not be working on a daily basis. So thanks everybody. Wonderful session, and to the audience, I hope that you all found it as insightful as we all did. So thanks everybody for that. Over to you, Sneha.
On behalf of the audience,
Thank you.
Speaking on behalf of the audience, before I let the panelists go, there is one question in the Q&A that we'd like you to take up. What can be new scopes?
Okay.
Go ahead.
So the question is, what can be new scopes in financial services to make customer-friendly interfaces as we have implemented Bheem, UPI, QR code? Any researches are going on in this? So, Mr. Rajoshi, I would like to direct that to you. I'm presuming that seeing having the access to a host of financial services firms that you work with, what are the latest trends that you see coming up, in the short term and the medium term?
See, what we are seeing now is that most of these financial services institutions are taking a customer lifecycle view into account. And that is at the backbone and being directed as a DNA for the organization, along with some of the other things which we discussed. So you're not selling everything, all kind of financial products to all kind of customers at the same time, right? You're taking a customer lifecycle view at each and every age of the customer's financial journey, how you are devising those products and creating those propensity models to reach out to the customers at the right stage of his life cycle, be his marriage or after he has a kid or maybe when he's 45 years old. You are devising those products basis data which is available with you outside your customer franchise, and then creating those propensity models and hitting the customer very appropriately rather than going all out and trying to boil the ocean. So that is, I think, if I can mention as a larger and a broader trend, that is what we are seeing.
Got it. So personalization is the name of the game now. So thanks a lot. I hope that there is not anything else that we have missed out on. Over to you, Sneha, again.
Thank you so much once again. This has personally been very, very enlightening for me, I'm sure to a lot of us as the audience as well. Thank you all one more time. I'd like to thank heartily all our panelists. Thank you so much once again for joining in. Thank you.
Thank you.